So how does this work when I buy a house? Do I have to pay the taxes for the whole year even if I just bought my place in October? Jamie Millhiser, Fairway Mortgage, how you doing? We get this question a lot, especially from our first-time homebuyer clients. And in the state of Wisconsin, other states do their property taxes a little bit differently. But in the state of Wisconsin, they hit you one time due January 31st for the year preceding. So right after the holidays, you get whacked with this tax bill, but it kind of makes it easy when we talk about how to break down a property tax credit, your initial impound or escrow for when you do buy your property, and then how it works when the tax bill comes due. Let's take a look at some real easy math together on a couple of different slides. All right, scenario number one, it's this easy. For sake of easy math, let's say you're buying a house where the property taxes are $2,400 a year. That means the tax cost on the house is $200 a month, right? Easy. Now let's say you're closing escrow or buying this home at the end of June, which is the 6th month of the year. The seller credits you $200 per month, so 200 times 6 is $1,200 in this scenario at the closing. You will begin your escrow account at the time of close with that $1,200 that the seller is crediting you. Then as the year goes on, you'll make your mortgage payments accordingly, and when the end of the year comes, there'll be enough in the escrow account to disperse properly to your municipality or county treasurer. Now, just for sake of review and looking at another angle on this, let's look at scenario number two, buying a property in November where the taxes are $3,600 a year. Quick math, that's $300 a month, 11th month of the year, $3,300 getting credited to you on the HUD-1 settlement statement the day of close. Once again, you don't touch that money. That goes into your new escrow account. You'd make the December payment, bringing the account to $3,600. The check would disperse out, and you could pay your treasurer the amount owed for that year. Now that takes care of the tax part. Here's where another question comes in. What about past due utilities, water bills, sewer, anything like that? Especially in this day and age of so much foreclosed property on the market, a lot of our buyers are apprehensive, curious about, well, where are we with the electric bill or the water bill that the previous owner may have had? The best part of news on that is, same with the taxes. You only pay for the time that you have. If there are past due water or money due for an electric bill on the property you're considering buying, that tab is picked up by either A, the seller, or B, we're seeing this a lot, the listing agent, the realtor that actually has that listing. So by the time you get to close, through the normal process of title insurance, as well as something called a city letter, you can leave that closing with the keys in your hand, feeling 100% sure that there are no bills or skeletons in the closet that are going to pop up later, or you're going to get some nasty letter in the mail stating that you owe somebody money that you've never heard of from prior to when you even owned that house. Won't happen. Well, I hope this clears up some of your concerns or reservations possibly about the close of escrow on a piece of real estate and possibly getting zipped with some bills that have occurred prior to you owning the property. If I didn't cover everything here, feel free to shoot me an email or a phone call anytime. The team always responds. This is Jamie Millhiser, Fairway Mortgage. Thanks for watching the video. Hey, follow me on Twitter.